welcome. This is well, Hot Money. In this show, we take you through all that is buzzing in trade. And of course, but before that, let's take a look at the top headlines. Markets under pressure. Nifty trades below 20,800 ahead of the FOMC meet. And tech falls, sours market sentiment. Index remains the top drag with TCS, Infosys and Tech Mahindra deep in the red. And Adani stocks in focus as the group plans to invest $100 billion on energy transition in the next 10 years. And meanwhile, Morgan Stanley makes a strong case for India, eyes 2024 general elections and expects a 14% upside to the BSE Sensex. And from the primary markets, stationery maker DOMS and Nexus Ventures backed India Shelter Finance Corp IPO opens today. Both companies have an offer size of about 1,200 crore rupees. Now, those are your top headlines, but to take a very quick look at the markets at the moment, where we're looking at yet another quiet day of trade, though the benchmarks have come off from their day's highs. In fact, trading near day's lows as we speak. The Nifty has lost about 0.5%. It's the same for the Sensex. Not too much to speak for otherwise. When it comes to the Bank Nifty, well, you know, that is going to be in focus considering it is the weekly options expiry today. That is where we are looking at largely flattish moves after we saw weakness earlier on the session. Since then, we have seen a move largely sideways from there onward. In terms of, you know, your top movers, let's bring up your Nifty contributors and take a look at where you have in fact seen a lot more traction coming through. So you do have NTPC, Power Grid, L&T along with ITC providing a little bit of support on the upside. But what is really weighing down the index is the IT pack. Infi and TCS, case in point, followed by HDFC and Reliance Industries. All of them heavyweights and all of them weighing down on the benchmarks. Pardon me. So, well, we're going to have to continue to keep an eye on that one. Let's also very quickly pull up what's happening with the broader markets and take a look at what the mid-cap and the small-cap indices are doing as well. So, you know, in terms of the small cap, the mid cap index, that's trading flat at the moment. You could say it's a little bit of an outperformance considering it's not lost today. And it's the same for the small cap index too. Not too much to speak for otherwise. So in general, on the whole, we're not looking at a very large momentum in any of these indices for that matter. And we're going to continue to keep an eye on some of these indices. But that said, I'm going to move on and talk about all the stocks that we want to address in today's day of trade. So in terms of the big movers, of course, we do have REC and PFC, which will be in focus. Besides that, a handful of pharma names will also be put in the spotlight, specifically Shilpa Medicare and Laurus Labs, one for positive, one for negative. We have a whole host of banks. One, of course, is Axis Bank. The other one, the Indian Bank, along with something like a Bank of Baroda, will also be is something that we're going to talk about in the show. And besides that, want to talk about Suntec Realty, of course, because that's where we've seen a large bulk deal. The real estate sector continues to be in focus in general overall. And, of course, we are going to address the IT space as well, considering the kind of weakness that we have seen right now and the relative underperformance with respect to the benchmarks that the sector has seen as well. The question really is that becoming a little bit of a defensive play at the moment? And why is it that a lot of these investors are not so interested and don't have the IT sector at the top of their mind when it comes to investments? But we'll talk about all that and discuss all of that with Avinash Gorakchakar. He's a director of research at Profit Mass Securities who will be joining us on the show. And from there on, let's take up the first of the many stocks and themes that we want to discuss. Pharma stocks. And in this case, we're going to talk about Laurus Laboratories and Shilpa Medicare. But I'm going to talk about Laurus and let's pull up the chart. Let's take a look at what Laurus Labs is doing. Now, so it is down around 2.5%. I'm going to get in my colleague Varsha, who joins us to give us some more details, and this is to do with the US FDA. Varsha, good afternoon. What can you tell us?
Good afternoon. Good afternoon. So as you rightly said, Laurus Lab is down 2.5% today. Now, since its subsidiary Laurus Synthesis Private Limited received 5 observation after US FDA inspection of their Vizag plant. Now, the inspection was conducted from 4 December to 12 December. Now, if you see what lies ahead for the company, what are the future prospects of the company? Company has guided towards positive outlook for H2 and FY25, driven by increased sales in API, ARV, your oncology segments, formulations and CDMO business. And if you see it has potential to achieve higher EBITDA margin in future.
Sure. That's as far as Laurus is concerned, but can you also give us an update on Shilpa Medicare? What's happening with that one?
So if you see, Shilpa is in focus today. Now, company has received approval from TGA Australia for Bangalore plant. Now, the approval is for manufacturing and testing of oral mouth dissolving films. Now, if you see, unit is already approved by UK and unit supplies oral film products to US and other markets. And this approval will enable company to market its oral film products in Australia as well. And a company has pipeline of products in this type of dosage form. Now, if you see the growth prospects of this company, Agam, since this company is more focused towards oncology segments, they are trying to diversify it and they are exploring non-oncology API segments, which has high growth potential and can serve as an import substitute API. And if one have to see the stock performance of the company, so in last 6 months, company has given almost 57% return to its investors, and the year-to-date performance has been 34%.
Okay, Shilpa, thanks for getting us those updates. So keeping an eye on Laurus as well as Shilpa Medicare, one advancing, whereas the other declining in trade today. But let's take both these counters up and perhaps the entire sector up with our expert for today. Avinash, good morning and thanks for joining in. What are you making of the latest developments? We've certainly seen a little bit of impetus in a whole host of these pharma names off late. But it ever so happens that, every now and then you will have a lot of these pharma names also run into trouble when it comes to US FDA. What are you making of the sector? If you have any views of the two stocks that we spoke about as well, if you could take us through your outlook here.
Yeah, I think, first of all, as far as Laurus Labs is concerned, I think they have been issued Form 483, for their Vizag facility. And I think, there were about 4 or 5 observations. So I think unless and until now we get clarity from the management as to how things are going to be cleared and when regularity would happen at this facility, I think definitely the next couple of quarters are likely to be quite challenging in terms of revenue and, margins. So I think that's what is visible in the stock. The stock has opened weak today. My sense is that Vizag is a very important, facility for Laurus, and I think any delay in getting again approval, from US FDA could possibly, impact their overall performance for the second half of this financial year. Although longer term we are quite positive, but I think the near term looks definitely quite challenging. And as far as Shilpa Medicare is concerned, see, this is a very leading oncology player. They're now diversifying into non-oncology products. And I think this approval for their Bangalore facility for the Australian market is definitely a good sentimental booster. I mean, what kind of revenue and what kind of top line contribution comes in from this product would obviously decide its future course of action. But our sense is that over the next 6 to 12 months, despite 34% year-to-date upside, the stock definitely looks attractive. I think if one were to look at the next 12 to 18 months, I would believe that any dip in the stock price would be a good opportunity to accumulate, because oncology is a very strong point for the company, and this is one space where margins are very attractive and very limited number of players operate in this market.
Okay, well, that's what you have in terms of pharma stocks in the pharma sector in general. But from there on, we move on to the banking space. Now, we've actually had a lot of updates here. A slew of banks are in the spotlight on the back of fundraising, and Mihika is joining us to give us an update on all of them. Mihika, let's start off with Indian Bank, and besides that, I believe you have a bunch of other banks as well in your list today.
Yes. So let's start with Indian Bank. It's down over 1% today. However, it's launched a QIP of 4,000 crores at a floor price of 414.44 rupees per share, which is at a 5.3% discount to the previous close of the company. And the company might also offer a 5% discount to the floor price. And this also comes after Indian Bank, Bank of India's 4,500 crore QIP, and Jammu and Kashmir Bank's 750 crore QIP. Then we have an Axis Bank, which is down again over 1%. and reports suggest that Bain Capital will be divesting its minority stake, and the deal, when you calculate, it's 3.34 crore shares, which is around 1.1% of stake to be sold, and at yesterday's close, the deal is valued around to 3,700 crore rupees. Now, the floor price is at 1,109, and which is at 2% discount to yesterday's close. And if the deal comes through, it would mark the second instance that Bain Capital has divested a part of their stake in Axis Bank. In June, Bain Capital offloaded around 0.7% stake in Axis Bank at an average price of 968 rupees per share, which totaled 2,178 crores of divestment. And before this, the firm had also divested 1.2% stake back in October 2022. And then finally, we have a Bank of Baroda, which is up 1%, and the company's capital raising committee will be meeting on December 15th to consider and finalize the quantum of the first tranche of the Tier 2 or the sub-debt instruments issue within the bank's approved capital raising plan.
Right, Mehika, thank you so much for getting us those latest updates from a handful of banks which are buzzing in trade today. Let's take this up with Avinash as well. Avinash, let's split this into two parts. I want to address the private sector banks first. While we have seen traction, which is then they moved in tandem with the markets, there has been a slight underperformance when it comes to your private sector banks. How would you address this? And any of these names that you mentioned pique your interest?
Yeah, I think, see, as far as the private sector banks are concerned, we definitely have a positive bias in the longer term. But, in terms of valuations, our sense is that a lot of catch-up has already happened. I think specific stocks to mention would be ICICI Bank, Axis Bank, IndusInd Bank. Here probably a moderate upside of, say, 13-14% looks possible. ICICI Bank has been our top pick. We are looking at a target price of around 1150, 1200. But if you look at the PSU banks, my sense is that the PSU banks could offer a better opportunity in terms of re-rating, considering the kind of strong credit growth, the kind of balance sheet improvement which these banks have done. And most importantly, a lot of these banks have now adopted technology which earlier was absent. So my sense is that, you could probably see a better risk reward in stocks like SBI, a Bank of Baroda, or maybe typically a Canara Bank, where typically, these banks are now getting a lot of interest from the institutional buyers. Like Bank of India did a QIP, that was a very roaring success. Indian Bank has also done a QIP, I think very strong response to the QIP. So I think a lot of funds are now looking at these banks very closely and expect a better risk reward. So our sense is that, within this pack, I think it would be better to put your bet on at least for the next, say, 6 to 12 months.
Okay, well, we'll, of course, keep an eye on that one. 6 to 12 months is the kind of horizon that Avinash is working with at the moment with respect to the banks he's spoken about. On that note, we slip into a very quick break, but on the other side, we talk a lot more about all the stocks that are on our radar. Stay tuned in. Welcome back. You're watching Hot Money on NDTV Profit. We are taking stock of the markets at the moment, and we haven't seen a lot of change, and the benchmarks do continue to trade near their day's lows. As we speak, the Nifty has lost about 130 odd points. But we're now shifting focus to the real estate sector, particularly Suntec Realty, where the stock is down by as much as 5% after the stock changed hands, and this is to the tune of nearly 60 lakh shares. And we now have Anushi Vakharia, who joins us to give us more details on the same. Anushi, good afternoon. What do you have for us?
Afternoon, Agam. So as you mentioned, there was a huge block trade today in Suntec Realty, which resulted in about 59.5 lakh shares changing hands, representing about 4.1% equity. So this happened at a price of rupees 484.75 a piece. Again, this is a discount of of about 3% compared to yesterday's closing price. Now, if you look at the intraday, just the intraday stock performance, it did reach about 8% down, which is the most fall it has seen in its last 3 years. Now, if you look at the volumes, that traded at about 8 times higher compared to its 30-day average. Right now, we don't have the, if you want to get more clarity on the buyers and sellers on the deal, just let's look at the shareholding patterns, wherein if you look at the promoters, they hold about 67% stake, so a major chunk over there. And if you come to the non-promoter side, we have the likes of LIC holding about 4% stake, and in the foreign funds we have Prabhay Investment Funds and BW South Asia holding about 6% and 4% share respectively.
Right. Thank you so much, Anushi, for getting us those details. Of course, as Anushi has mentioned, we are uncertain of who the buyers and sellers are, but Anushi has given you a list of all the key stakeholders in the company, and I'm sure that by the end of today we are going to have all those details out for you in any case. But let's take up the sector with Avinash as well. Avinash, the real estate sector has gone from strength to strength, perhaps the big sectoral move for the entire year in this case. And while some would argue that all the positives have been factored in, the question really is that even as there is more supply which hits the markets 6 months down the line, based on that, what would your assessment of the sector be? And would you in fact allocate fresh funds to the real estate sector at this moment?
Yeah, I think one thing which I would like to mention is that, despite the fact that the real estate sector has done remarkably well, we have seen a lot of stock upside across many companies. I think the best is yet to come, and most importantly, demand continues to be very strong. Inventories have been moving despite higher interest rates. Hopefully, inflation coming down, and by February, March, if we see the interest rate cycle, with the interest rates moving down, that would be an additional booster for, real estate companies. Coming to Suntec Realty, I would believe that, our sense is that this is largely a Mumbai-based company. They had announced a large project in Boisar, in the affordable housing segment, and it has been doing quite well. I think despite the fact that the stock has not done that well, but our sense is that inventory sales plus cash flows generated by the company have been pretty strong. So I think over a longer term, I think it definitely could do well, but I think the markets always are looking at selective pockets, typically the premium Mumbai segment, typically North India. And I think in this category, I would be more positive on, bigger players like Oberoi Realty, DLF, a smaller Gurgaon-based player like Anant Raj Limited. So, these are companies where we feel that a lot of juice and a lot of upside still remains yet uncovered. And more importantly, I think next 6 months could be even stronger considering that the festive demand has been good. So hopefully once interest rates start moving down, I think you're going to see a further re-rating for the sector. So I think I would suggest investors to stay invested. Yes, I think buying selectively is the key. Across the board may not be the answer, but these 2-3 companies, Oberoi Realty or typically even a Suntec or a Anant Raj, definitely could give in good returns over the next 12 to 15 months. So I think the cycle has turned around and it's not yet a time to sell your stocks in a hurry.
Okay. And from there on, I want to take a quick view from Avinash on PFC, REC, because these stocks have been on a tear, right? There's no stopping this one because it's just every time you feel like this one is overdone, you see these stocks move up by another 5 to 10%. And it's been a daily phenomenon. If you just look at the 12-month chart, staggering up move there. And to say that these are not your stocks for the year, well, that would be an incorrect statement to make. So we do have substantial gains coming in, and there will be multi-baggers just in 1 year. Avinash, can you come in on PFC and REC? What would you do with them at the moment? Do you think that if you were holding on to these, well, you would like to perhaps book some profits here? Because even on a fundamental basis, there is a lot of argument that these stocks have run up because of change in policy, and they are also susceptible to government policy going ahead, which means that there could be a decline coming through as well.
No, I think you're right, because I remember REC earlier was considered to be a dividend yield stock. People used to look at the dividend and then buy the stock. But looking at the kind of sharp upside now, the dividend yield does not matter. The markets have started looking at power financing companies in a different perspective. But I think some amount of profit booking is essential. And I think at these levels, it would be a little risky. Your margin of safety is definitely very less, at these odd levels. So I would believe that, unless we get some meaningful correction, only then I think stocks like REC and PFC could obviously do well. In fact, the new kid on the block, IREDA, has also started moving, considering that they are large, power financiers in the renewable energy space. So I think, it's the flavor of the season, but I think clearly in terms of fundamentals, it's a time to basically be a little cautious. I think, investors who are holding on should book part profits and I think hold on to the rest of their stocks. Longer term, definitely the picture looks to be good, but in the near term, I think these seem to be quite fully valued.
Right, Avinash, thank you so much for joining in and taking us through your views on the several stocks and themes that we've discussed. And on that note, we're going to slip into another short break. But don't go anywhere. On the other side, we get you lots more news and updates. Welcome back. You are watching Hot Money on NDTV Profit. And now we shift focus to KPIT Technologies, where the stock is up over 2% in trade today. Now, the company has unveiled the first ever in India sodium-ion battery technology. My colleague Tushar Deep Singh caught up with the chairman, Ravi Pandit, for the details. Take a look.
Take us through the journey so far. We have learned in a presentation before this interaction that it has been a long time coming. So how has it been the journey so far, and what is the roadmap ahead for this particular technology?
So we have been at it for 8 years now.
Okay.
So you see, our thought was that 2-3 things. One is that, as the vehicles were going in for electrification, we wanted to make sure that we don't replicate the crude oil scenario where there are a few countries in the world who control everything, which is what was likely to happen for lithium-ion batteries. So we said we need to look at some different chemistry than lithium-ion, where the materials are earth abundant. So the thought process started with that. The second part of the thought process was that as a country, we had lost the race of leadership for lithium-ion batteries. So we said we must come up with something where we can be at the forefront of global technology. That was a thought from a science perspective. But we also looked at what is the usage pattern in the country where the vehicles will go electric. So we did extensive survey of buses, of delivery vans, the LCVs vans, the 3-wheelers, the 2-wheelers. And then we realized that if one were to live with a slightly less energy density of a sodium-ion battery, you would need to have some other advantages. And those advantages are it should be able to charge very quickly, so that a smaller battery can take care of a requirement, then you can charge multiple times in a day. It should be able to resist the temperatures here. It should have a long life and therefore the low cost. So that is what we looked at. And so the whole thought process of coming to this stage was to look at the technology movement on one side and the market requirements on the other side. Our sodium-ion battery is really the result of these two.
Okay. So what is the roadmap ahead now? So you are not going to make the batteries. You are a technology provider, you're a technology company, you're providing the technology. So how soon can we see wide-scale adoption of this technology by our OEMs?
So I see two stages in that. I see the first stage as joint projects with end users. We already started working with some.
Okay.
So these will be like demonstration projects with end users who will see the benefit of this in all aspects that we talked about.
Okay.
And then that will be quickly followed up with a technology tie-up or a licensing or whatever with the end manufacturer. We are also in conversation with end manufacturers for this. I would think that the whole thing should take, the projects should start right away. We have already started one, it will start more. And I'm hoping
Hello and welcome to Portfolio Manager, where we get you the insight into the mind of a portfolio manager or a fund manager. And today I have with me Sumit Jain, who is the Deputy CIO of ASK Investment Managers. Sumit manages equity portfolio of nearly 36,000 odd crores, and he's one of the largest fund managers in the country. Sumit, thank you very much for joining us on the Portfolio Manager. To begin with, take us through the investment thesis that you have. You manage a big portfolio of nearly $4 billion, one of the largest in the country in the portfolio management service space. How do you look at stocks? How do you look at themes? And what is the thesis that you follow?
Sure. Sajid, first of all, let me thank you for having me here. Before I come to thesis per se, let me take you through what is our investment philosophy. Because investment philosophy generally don't change. Businesses may alter, but the investment principles, investment philosophy, over cycles remains the same. So essentially, when we look at any business, we look for 3 or 4 very important things. And by no means, I'm trying to say that this actually